So, question that we want to ask is us first. Who owns digital assets today? Okay. And who's made direct equity investments in companies that are using blockchain technology but are not digital asset companies? Okay. Got that?
Oh, yeah.
Great. All right. So, Mike, you need no introduction. You've been on the stage a whole lot. Chris, please introduce yourself.
Sure. I'm Chris Wake. Started and run an early stage venture fund called Atypical Ventures. We focus on plausible science fiction. The easiest way to think about that is acute technical risk with almost zero market risk. So our last investment was a company putting data centers on the moon, for instance.
Okay. Barbara?
Okay.
Follow that.
Yeah. No.
You dropped the mic.
Yeah, no, we focus on just normal stuff. I'm just kidding. So my name is Barbara Iyayi. I'm the founder and managing partner of Unbounded Capital, which is focused on the future of finance. So we look at that with respect to three things. One is open finance, which is sort of blockchain infrastructure, frictionless infrastructure, interoperable. And two is decentralized finance, where we look at basically bringing financial services on chain and tokenizing assets. And the third is embedded finance, which we look at broadly, but in the context of embedded lending and leveraging it for like tokenized credit. So really going after companies that our biggest value add is really helping companies scale into emerging markets, particularly Africa. So we invest globally, but we help bring these companies into where we think is the largest fintech, fastest growing fintech opportunity.
Okay, thank you. And from each of you, what's been your investment so far in blockchain companies?
Well, they saw them. The ones you saw earlier today and the ones you're going to see later in the afternoon.
Okay, Chris, anything?
So we made two investments directly out of the fund. One into a company called Fabrica that was moving real estate on chain. Specifically was fascinated when I got on the phone and I didn't hear much about blockchain, but instead the nuances of all the legal morass and paperwork that goes into moving properties at the local kind of county and state level. And then the second was into a company called Mojito, which is trying to bring existing kind of IP portfolios into the digital asset space. So allowing legacy companies to monetize their existing portfolio of assets.
Very cool.
And
yeah, for me, we've really gone after early stage companies in Africa and sort of going after the global diaspora. So my first investment I made as a fintech investor was in a blockchain payment switch. So it's sort of the first blockchain payment switch in the region. So if you go to the ATM in Nigeria and you get cash, that's going through the blockchain. And so that was my first investment. And then we invested in a company that's using stable coins for cross-border payments. So we're talking about remittances and all of that. They're building liquidity infrastructure sort of that matches supply and demand from both sides of the equation when it comes to remittances and cross-border payments. And then we invested in a company that sort of converts prepaid airtime, which is in a lot of emerging markets, into crypto. So it's a great way of on-ramping the hundreds of millions of mobile users that have airtime and getting them to Web3.
Okay. And to answer for myself, my LPs didn't want me taking any crypto risk, so out of 88 investments, we did one blockchain investment that was doing GDPR data permissioning for global organizations. Okay, so by way of setup, here are the challenging statements. One is that the VC market is in complete disarray, and there's not much hope for meaningful liquidity to thaw things for at least several quarters. Two is as I said before, the single most toxic word amongst VCs and LPs is not markdowns, it's crypto. And third, so far, blockchain has really only generated revenue for IBM and pretty much no one else. Their consulting revenue. So, in that context, what has blockchain done to date, in your mind, as a VC? Why do you want to deploy into it now.
Was that for?
Yes.
Buddy? The audience? Yeah.
I mean, I think I talked about it a little bit prior to lunch. For me, when I look at blockchain, I look at infrastructure. So for me, you have to build out the infrastructure before you can have the applications that use the infrastructure. So the analogy I would use is in 1999, Cisco, Stratacom, all the router companies, all the infrastructure, the fiber companies, they built all the infrastructure, and the hardware companies. And then it wasn't until later that you could build on top of that. So Netscape is the browser, and then you had a whole bunch of other applications for B2B or enterprise on top. And then mobile just further, pushed that into our pockets. But people forget that 95 to 99 was 4 years of building infrastructure. I think today it's going to be less dependent upon hardware per se because of the AWSs and Google Clouds of the world. But it still takes time to build the proper infrastructure, the APIs, the connectivity. So I think, what I get excited about is I've seen this movie before, and this is just watching the sequel. So it's a little bit easier. So I don't get necessarily concerned that it might take 2, 3, 4 years to do, because I know what's coming. And that's what excites me about meeting with entrepreneurs that are building things that matter, building things that change people's lives, whether it's, pushing money around the world or playing new games. That's what, for me, matters.
I'd probably add maybe 2 things on top of that. One, I think things that create net new value are interesting. So if you can build infrastructure, but you can focus on a true hair on fire problem or need for some set of customers, and you can actually create meaningful value for them, there will be a business there. So 1, I'd say that. And then 2, I think just overlaying, we tend to see these waves within technology and within enterprise of consolidation versus decentralization, or like the move in versus move out. And I think that ultimately, we're kind of seeing a bit of a shift more towards the internal and the focus on kind of centralizing some of the infrastructure for those companies. But at the same point, we're going to revert. It just happens cyclically this way. And I think as you start to look at the prevalence of distributed devices, IoT, et cetera, you start to get into a place where just the underlying architecture of blockchain being able to move data in a decentralized fashion, and you start to overlay some interesting things around throw AI on everything, and it gets a little more interesting. But when you start to actually look at some of the old models that we used in what could be classified as AI, and start to apply them in new contexts, you start to get some really interesting things, whether you're talking about federated learning or you're looking at some more semantic AI or neural engines going back to even the 50s and 60s. That stuff starts to get more interesting now, and the current paradigm when you overlay that with large language models, for instance.
Yeah, I think the value that has been, I think the beginning of this blockchain infrastructure wave just didn't really maximize the value of what this was about in the first place, which is really around making the infrastructure inclusive and accessible to the world. I think it was a very sort of niche opportunity for the last couple of years, and now I think it's becoming more mainstream. And so I think the value is really around that. How do you make this, something that doesn't have to be in front of people's faces? It could be at the back end. It could solve more of that problem. For me, as a VC, I get excited because of the business model disruption that's happening, right? The fact that as a fintech investor, you can get protocol revenue, you can get additional yield. That business model concept is interesting. And then from an additionality perspective, what are you getting that you wouldn't get without this decentralized infrastructure? And that's why I focus on certain markets, because in these markets, they're actually leapfrogging into these technologies because there's no other infrastructure in place. It's become the norm to use stablecoins for FX and transactions globally, coming out of certain regions, like in Africa. That's normal, right? It's not a crypto thing. It's a normal technology. And I think that's what is exciting, is when things are becoming more sort of, without it, what else are you going to do? You have no other option but to use it. Those are the opportunities I go after.
That actually deserves an exclamation point. So going after markets where you are truly moving from pen and paper to new infrastructure does seem like a very ripe opportunity in a space that like will see massive change over the coming years.
Yeah, and I think on a geographical level, I learned about Bitcoin from an Argentinian who was one of the early pioneers in Bitcoin. They called him Patient Zero. He's the one that gave the hard drives of BTC to Reid Hoffman, Bill Gates, and those guys. He learned about it because he was from Argentina, and the inflation was so high that he couldn't function. So he was the first person I know. I think he bought a car or a house or something with Bitcoin. He was using it. And the other example that I would give is sort of WhatsApp. If you're an American, your texting package is free. So we don't even think about it. But if you do business with anyone in Europe or Africa or Latin America, they pay for their texts. So WhatsApp came along and we missed it because we didn't understand in the US that was a valuable thing. So I think having a global view of this, sometimes the best ideas that they don't always come from here or the Valley, they come from all over. And I think that's not just blockchain, but just generally speaking.
Semiconductor companies that I have seen at the startup phase or folks focusing on lithography, so the input goods to semiconductors, is increasing. I think what people are looking for right now, specifically with the AI craze, is fundamentally different modes of compute. So whether you're looking at optical compute or you're looking at, I was even talking to someone about biological compute. So I think like the notion of this is, causing a lot of people to take note that there will just be an overarching need in the very short time frame to, one, have critical infrastructure onshore, and at the same point to look at things from an orthogonal point of view and to find kind of things that don't look like what we expect to see today. So it's not going to be the next GPU, but it's going to be something that is fundamentally different in architecture from a GPU. And so people are looking to invest into those categories. Now, from an investment standpoint, I mean, going to Mike's presentation from before, those are a long time horizon. So you need to have kind of that in your wheelhouse and the structure of the fund from which you invest. And I think that's where, frankly, a lot of early stage deep tech funds tend to fall down because they don't think about either the time horizon or the downstream capital requirements for those businesses. Those are expensive, but at the same point, they can also get a lot of free money. So the CHIPS Act and other kind of state incentives. I was talking last night about New Jersey. New Jersey has turned R&D tax credits into something that you can actually sell. So in effect, you can not only take in venture capital dollars, but then you can turn around and bank R&D tax credits by selling those on to a big company. Those sorts of things become quite interesting. And so if you invest with a lens on downstream capital risks and also the opportunities like that, you can actually get into some of those early infrastructure investments with a view to actually have a meaningful exit within the time frame that like the fund exists. I haven't seen a ton of things that were truly compelling, but I think when it comes down to it, I mentioned federated learning. I think federated learning and blockchain as an architecture is interesting. Federated learning basically means you move the compute and like the processing to the edge. So when you combine that with the ability to move bits in a decentralized fashion, suddenly you get into an interesting space between edge devices being able to share intelligence between them. So that's one interesting space. I think I've also seen a couple of companies that are focused on deploying ML solutions to, as funny as it sounds, like server-side config. So when you start to think about mining and being able to actually optimize on the fly the configurations on the rigs that you're using, that increases your performance of those rigs. And you can start to think about that in the context of not only the performance, but then also the input goods on like the energy used, when you're using energy, et cetera. And like that whole chain becomes quite interesting. The former, focused on kind of the federated learning, I think is much more application layer. We're going to see some interest. The other is more infrastructure. And in the context of at least how I think about infrastructure, it's a little too narrow because you're focused on a very narrow solution with a relatively defined set of players that you can go after as customers. And then ultimately, you kind of saturate that market with time, and you're up against like other folks that are trying to do the same sort of thing.
Yeah. I'll just add AI to me. It's funny, my friends and I in the Valley joke because we've been talking about 2001 Space Odyssey AI from the 70s, like people before they were born. All AI really is machine learning with extremely large data sets. That's all it is.
Yeah.
So the machine learning hasn't changed. What's changed is the amount of data that is in the world today. I think,
and computing power, low cost.
yeah, and computing power. But if you look at like the data, I mean, you mentioned IoT. So instead of 2 or 3 devices connecting in a home, it's 20. Your refrigerator. If you look at the input source, so in the old days, you typed into a computer. Well, you can only type so fast. Now it's language. So if you look at Siri and all, there's so much data, and I would argue that there's an unfair advantage to Google, Facebook, Amazon, Alibaba, Tencent. The companies that have all the data are the ones that, quote, have the AI intelligence. So to me, it's really a data story because it's not just text now, it's video, it's so it seems smarter because the data that they're putting into it is better. And these large language models, at some point it might be indistinguishable from actual intelligence.
Actually, I don't think the big tech companies are really, harnessing global data. I think they are still very limited in how they're using data. When I ran an AI-powered digital identity company, that was the biggest blocking, the biggest bottleneck is that we didn't really have data in emerging markets to train the AI models. And so we spent a lot of time, like you said, having to figure out how do we get the data. So for me, I haven't really seen startups really solve that problem. Everyone's sort of trying to leverage what's already out there. And I think the true opportunity is when you go out and you actually get that data that will make these models a lot more inclusive, a lot more personalized, and a lot more sort of, real. Like AI has to be real, otherwise it actually becomes a problem. So anyway, that's what I look for when I look at how AI is incorporated in any application, whether it's blockchain or whatever, is how real is this AI? And it's not real if it doesn't include global data.
Right. One of the blockchain solutions I evaluated now several years ago was effectively storing corporate bonds on a blockchain, right? To be able to process them more efficiently and create secondary market in them and all these kinds of things. But the real problem with that business was that it cost the banks who might have adopted it a bloody fortune to actually digitalize everything. So when I think about the AI application layer for enterprise or industry style solutions, that might be a very interesting integration between AI and blockchain to me, whether it's legal contracts or the asset digitalization that we talked about, or these kinds of things.
Thank you very much, Mike, Barbara, Chris, Mike. Give a hand.